Assalamualaikum to my dearest lecturer, Madam Laili binti Acha Rajman, and to my fellow friends of AC2204C. Today, we are from Group 6 are going to present our group project of companies interim reporting, MFRS134, and operating segment, MFRS8 for our course FAR570 of Financial Accounting and Reporting 4. Greeting everyone, my name is Muhammad Rizwan bin Muhammad Hanafi, YTL's newly appointed Accounts Executive. Today, I'd like to introduce my loyal team who serve for this company and help me for today's presentation. Our first team member is Muhammad Fitri Aiman bin Hanafiyah, and our second member is Muhammad Nazrin bin Muhammad Ghazali, and for our last member is Muhammad Muaz bin Omar. Part A, Segmental Reporting, Company Background. First and foremost, YTL Corporation Berhad is a Malaysian infrastructure conglomerate founded in 1955 by Yoh Tiong Lei, after whom the group is named. The company has grown from a small construction firm into a global infrastructure company generating over 18 billion ringgit in revenues, with over 70% coming from overseas. The headquarters is located at 33rd floor, Nara YTL at Kuala Lumpur, Malaysia. On the other hand, I will introduce you to the company's top management, who is the respective leader of YTL Corporation Berhad. Firstly, the current executive chairman of YTL Corporation Berhad, Tan Sri Francis Yoh Sok Ping, who is known as Sir Francis Yoh, is a Malaysian businessman and the elder son of late Malaysia billionaire Yoh Tiong Lei. He was appointed as a managing director of YTL Corporation in 1988 and grew it into a multidisciplinary conglomerate comprising 6 listed entities. He is a great man with several awards entitled on him with high level of education. Next, the second person is Dato' Yoh Sok Kian, is the current managing director of YTL Corporation Berhad, a Malaysian-based investment holding and management company. He was appointed to the board in 1984. Dato' Yoh graduated from Heriot-Watt University in 1981 with a Bachelor of Science honor in building and was conferred an honorary degree of Doctor of the University in 2017. He served as Executive Director of YTL Power International Berhad and Managing Director of YTL Land and Development Berhad, both listed on the main market of Bursa Malaysia Securities Berhad. Thus, there are also several other directors who are not stand front, but they are always work hard behind the line that are available in corporate information. Furthermore, YTL Corporation Berhad is an integrated infrastructure developer with extensive operations in countries including Malaysia, United Kingdom, Singapore, Indonesia, Australia, Japan, Jordan, and China. The company owns total assets of 73.9 billion ringgit. YTL Corporation Berhad is amongst the largest company listed on Bursa Malaysia Securities Berhad and component of the FTSE Bursa Malaysia Mid 70 Index. YTL Corporation Berhad had a secondary listing on the Tokyo Stock Exchange since 1996 and was the first non-Japanese ASEAN company to list on the Tokyo Exchange. Lastly, the core business of the YTL Group comprise utilities, construction, contracting, cement, manufacturing, property development and investment, hotel development and management, e-commerce initiative, and internet-based education solution and services. Part A, Segmental Reporting, Management Approach.
Assalamualaikum and hi, my name is Muhammad Muaz bin Omar, and now I will be presenting to you about management approach. An operating segment is a component of an entity which engages in business activities from which it earns revenue or incurs expenses, and also which activities are frequently checked on by the chief operating decision maker for resource allocation and assessing performance, for which discrete financial information is available. So, to consider having a segment reporting. First, nature of the product or services. For YTL Corporation Berhad, nature is both product and services. They provide both of them. The company's major business segments are construction, information technology and e-commerce related business, cement and buildings, material industry, property investment and development, management service and others, hotel operations and utilities. The second, type or class of customer for the product or service. Types of customer for the product and services provided are different from customer to customer. For instance, construction segments customers depend on the satisfaction of the customer to the quality of their services. However, the cement and buildings material segment are based on the quality of the products and the company produce. The third one is nature of the production processes. For construction segments, YTL corporations have a lot of constructions that they have been doing in all over the country. For cement and building material segment, YTL Corporation carries out its cement manufacturing activities using its subsidiary YTL Cement Berhad. Property investment and development segment, through YTL Land and Development, has built up an excellent track record of building high-quality houses, apartments, condominiums with attractive and innovative design. And for hotel operation segment, YTL Hotel, subsidiary to the YTL Corporation, is involved in both the ownership and management in hotels and resorts that are a collection of brands differentiated by experience yet consistent in quality, luxury, authenticity, and service. Then, utilities segment, YTL Corporation carries out their utilities activities using its subsidiary YTL Power International Berhad, which is listed in the Bursa Malaysia main board with a market capitalization of about 5.7 billion ringgit. The second factor for having segment reporting is type of segment. The two types of operating segment are business or geographical segment. As for YTL Corporation Berhad, most of their segments are business segment type, such as construction, information technology and e-commerce related business, cement and building materials industry, and others. The last factor in considering of segment reporting is identify the chief of decision making and its responsibility. The chief of decision making is a function and not necessarily a person, which is a function in assessing the performance of the various segments and decide on allocation of resources to the segments. As for YTL Corporation Berhad, the CODM of the company is the Executive Director, which is Tan Sri Francis Yossoping. Since the Executive Director has the responsibilities in leadership of the board in ensuring the effectiveness of all aspects of its role and is primarily responsible for leading the board, setting the values and standards of the.
Next, I will be discussing about segmental reporting and its process. As you can see, it is a requirement for the company to disclose any information related for each segment. There are two types of segments, which depends on whether they are reportable segment or non-reportable segment. In order to determine whether a segment is reportable or not, a segmental test is conducted in order to differentiate between a reportable and non-reportable segment. The test is called the 10% test. Using revenue as its basis, the weightage of the total revenue from each segment must be at least 10% in order for the segment to be reportable. Now, as you can see from the table, the percentage of total revenue has already been calculated, and from the data on the table, there is 4 reportable segments and 3 non-reportable segments. The reportable segments are construction, cement manufacturing and trading, property investment and development, and utility segment. However, it is not over yet. After determining the reportable segments, another test is conducted in order to ensure that the total external revenue of the reportable segments must be at least 75% of the company's total revenue. After the amount of external revenue from reportable segments is extracted and then added together, we will get a total of 80,654,163 ringgit. Divided with the total revenue of 20,770,353 ringgit, then we'll get the percentage of 89.81%. Now, the amount is more than 75%. Therefore, there will be no change to the reportable segments determined by the previous test, as there's no need to identify another reportable segment. Okay, now after the 10% and 75% tests already conducted, now we will move on to new segmental report. As you can see, the new segmental report, all the segments are already been arranged into 2 categories: the reportable and non-reportable segments.
Part A, Segmental Reporting Conclusion.
Assalamualaikum, I, Muhammad Fitrah MFRS, will be the presenter for the conclusion. As you all know, segmental reporting is being used by corporations to analyze and assess the financial effect of the business activity and the economic environment in which the company operates. It sounds like a good thing, but every single good thing has its own demerits. Thus, what is the advantages and disadvantages of the segmental reporting? When I'm thinking about the advantages of segmental reporting, two things come to my mind. The first one is transparency and the second one is separation of segment. Let's talk about transparency. A segmental report can show to the company which segment is much more profitable and which one it doesn't. This information could be utilized by the company to increase the profit and to reduce its operational costs and to pursue the company goal. The second advantages of the segmental reporting is separation of segment. Segmental reporting The separation of segment help shareholder to get better understanding of the financial situation of the company. Let's say an event like a net profit recorded is much higher than anticipated, the shareholder can see where the money comes from and determine is it sustainable or not. It also helps them to make a decision regarding their investment in the company. Will they start invest or should they invest more? Or the other option is should they sell the share right now? Now let's move to the disadvantages of segmental reporting. I can think a few of it like data manipulation and cost allocation problem. Data manipulation can be done by the manager as they want their management to look good. They can manipulate the information that is being released to the public, making themselves look good in front of the users. This manipulated data can be helpful to the financial user that want to invest in the company. As for the cost allocation problem, some of the costs that incurred in the business process can be a quite complex problem in producing the segmental report. For example, joint costs, administrative costs, and legal expenses. Allocating these costs will take quite a bit of workforce, time, and cost that it needs to be done. All in all, the advantages and disadvantages of the segmental reporting is based on how much information in the statement is being used by the user. Thank you.
Part B, Interim Reporting, Basis of Preparation. Our basis of preparation for the company is financial statement of the group and the company have been prepared under historical cost convention and in accordance with Malaysian Financial Reporting Standard MFRS, International Financial Reporting Standards IFRS, and the requirements of the Companies Act 2016 in Malaysia. The preparation of financial statements in conformity with the MFRS and the Companies Act 2016 requires the directors to make estimates and assumptions that affect the reported amounts of assets and liabilities and disclosure of contingent assets and liabilities at the date of the financial statement and the reported amount of revenue and the expense during the reported period. It also requires the directors to exercise their judgments in the process of applying the group's accounting policies, although these estimates and judgment are based on directors' best knowledge of current events and actions, so actual result may differ. Besides, the areas involving a higher degree of judgment or complexity or areas where assumptions and estimates are significant to the financial statement are disclosed in Note 3 to the financial statements. The financial statements are presented in ringgit Malaysia and all values are rounded to the nearest thousand except as otherwise indicated. Lastly, the disclosure requirements pursuant to FAR570 paragraph 16 stated that the condensed consolidated interim financial statements should be read in conjunction with the audited financial statements of the group for the year ended 30 June 2019. Part B, Interim Reporting, Accounting Policies. Moreover, our company adopted several accounting policies for company's report, which is MFRS8 of lease and MFRS134 of inventory. These accounting policies and methods of computations adopted by the group in this interim financial report of fourth quarter ended 30 June 2020 are consistent with those adopted in the annual audited financial statement for the financial year ended 30 June 2019. Firstly, accounting policies used in preparing interim report are MFRS16 leases, where it supersedes MFRS117 lease and the related interpretation. Under MFRS16, a lease is a contract or part of a contract that conveys the right to control the use of unidentified assets for a period of time in exchange for consideration. MFRS16 eliminates the classification of leases by the lessee as either finance lease on balance sheet or operating lease off balance sheet. MFRS16 requires leases to recognize right of use of the underlying asset and a lease liability reflecting future lease payments for leases. The right of use asset is depreciated in accordance with the principle in MFRS 116 Property, Plant and Equipment and the lease liability is accreted over time with interest expense recognized in the income statement. The group applies MFRS16 using the modified retrospective approach. Therefore, the comparative information was not restated and continues to be reported under MFRS117. The retrospective impact of applying MFRS16 for the leasing contracts assessed to be relevant to MFRS16 as at 1 July 2019 is adjusted to the group retained earnings as at 1 July 2019. The purchases and sales of right to access and right to use license of intellectual property are excluded from the scope of MFRS16. Secondly, another accounting policies are MFRS102 inventory. Our inventories are stated at the lower of cost and net realizable value. Cost is determined on the weighted average or first in, first out basis and includes the cost of purchase and other costs incurred in bringing the inventories to their present location and condition. Part B, Interim Reporting, Type of Interim Report.
Type of Interim Report. There are three types of interim report, which is semi-annually, quarterly, and bi-monthly. Based on the report that have been provided by the YTL Corporation Berhad, their types of interim report is quarterly. Then, YTL Corporation Berhad financial report will have 4 quarters of interim report. We will be analyzing on the 4th quarter of the interim report of the YTL Corporation Berhad.
Part B, Interim Reporting, period for the current and comparative of company's financial statements.
The period of the current and comparative of each statement prepared by the YTL Corporation Berhad in accordance with the MFRS134 interim financial reporting was measured from the 1st April 2020 to the 30th June 2020, which is the 4th quarter of the accounting period of the company. The company accounting year ended on 30th June. As for the statement of profit or loss and other comprehensive income, the reporting period of the current interim financial report is 3 months starting from the 1st April 2020 to the 30th June 2020. The reporting period for the cumulative report is 12 months from the prior year until the current interim. It starts from 1st July 2029 to 30th June 2020 to 30th June 2020. The reporting period for the comparative report of the preceding year for the current interim is 3 months. It starts from 1st April 2029 to 30th June 2029. The reporting period of the comparative report of the preceding year for the year to date is 12 months. From the year start until the current interim, it starts from 1st July 2018 to the 30th June 2019. As for the statement of financial position, the reporting period of the current interim is 3 months starting from 1st April 2020 to the 30th June 2020, and the reporting period of the comparative report at the end of year is 12 months ended. It starts from the 1st July 2029 to the 30th June 2020. For the statement of changes in equity, the reporting period of the cumulative report year to date is 12 months. It starts from 1st July 2019 to the 30th June 2020. The reporting period for the comparative report of the preceding year is 12 months. It starts from the 1st July 2018 to the 30th June 2019. For the statement of the cash flow, the reporting period of the cumulative report is 12 months. It starts from 1st July 2019 to the 30th June 2020. And the reporting period for the comparative report for the preceding year is 12 months. It starts from the 1st July 2018 to the 30th June 2019. Thank you.
I will be talking about the adjustments made by YTL Corporation Sdn Bhd in the interim reporting. Now there are 2 adjustments that is made. First, the research expenditures amounting to 1 million ringgit intangible assets were incurred in the 3rd quarter of 2020. There is a possibility that a product will be developed from the process of research in the 4th quarter. The second adjustment is the transfer of the buildings by the company from owner-occupied property to investment property that has a value of 1 million ringgit during the pandemic. And here, as you can see, here's the extract of Statement of Financial Position of YTL Corporation Sdn Bhd as at 30 June 2020. Now, as you can see, the value has changed after the adjustments been made. For instance, and as you can see here, the amount of intangible assets has increased by 1 million ringgit because there is a possibility of the development of the intangible assets. The amount of property, plant, and equipment has decreased by 1 million ringgit because it is no longer an owner-occupied property. Meanwhile, the investment properties has increased by 1 million ringgit because the owner-occupied property has already turned into investment property.
That's all from us. Thank you.